Okay guys, so as I had promised, this is module number 1. We want to give the introduction. Okay, so the first thing is, what is Forex? So when we talk about Forex, we're talking about the biggest financial institution in the world, where over $2 trillion is traded. So it's bigger than stocks, it's bigger than futures, it's bigger than anything that you have probably heard. Then what is Forex trading? So we defined Forex. And then what is Forex trading? When we talk about Forex trading, we're talking about simultaneous buying of one currency and selling of the other. So simply, we are predicting that one currency will go up against the other. So that is Forex trading. You're just predicting that one currency will go up against the other. So I will explain more as we continue with the course. Okay, so what is being traded in the Forex market? So there are a lot of things that are traded in the market. There are indices that are being traded, such as NAS 100. Okay, so there are indices such as NAS 100, and then US 30, and then we have got commodities. So here at IntraForex, we focus mostly on commodities such as gold. So here we focus on commodities such as gold. So there are many things that are traded in the Forex market, but we want to focus mainly on the currency pairs, because when you are beginning or when you are starting in this journey to understand the movement of the currency, I think it's the easy one, like from my experience. So we will look at the currencies such as the USD, the Euro, the GBP, and then the CAD, okay, the OD, and then the JPY, and then the NZD and the CHF. So these currencies, one thing that you have to know about these currencies, these symbols, let's say for instance like this, the US dollar. So the first two symbols here, they represent the country, and then the last one represents the currency. So the first one represents the country, and then the last one represents the currency of that country. So for instance, the USD, okay, the country is the USA, and then the currency here is the dollar. Let's take for instance even the JPY. Let's take for instance the JPY. So the first two symbols is the country, in this case, which is Japan. Then the Y is the currency, okay, in this case, which is the Japanese yens. So that is simple like that. So there are three. Okay, so and then how do you make money in this market? Someone must be asking, how do you make money in this market? Okay, so as I explained, that we have got currencies, okay, that are traded. So the pairs that I mentioned on the previous slide, you combine them, those currencies, you combine them into currency pairs. So we combine the US dollar with the Japanese yen, and then we have a currency pair that is called the USD JPY. We combine the euro and the US dollar, we have the currency pair that is called the Euro USD. The list is endless. So this is how you combine the currency pairs. So how do you make money? Let's take for instance, we've got the USD CAD. Okay, let's take for instance you have the USD CAD, and you have analyzed the market. I'll also teach you on how to analyze the market. So let's say you have analyzed your market and you have seen that the USD is stronger than the Canadian dollar, so it's going to go up. Okay, so this is where you buy the market. So when you buy the market, okay, so when you buy the market, you are actually predicting that the USD CAD is going to be stronger. I mean, the US dollar is going to be stronger than the Canadian dollar. So that's the reason that you buy the market. Or let's say you have a strong reason that the US dollar is going to fail versus the Canadian dollar. This is where you sell the market. So when you sell the market, you are predicting a downward movement. So a downward movement, it means you are selling there. So let's say for instance, so how do you make your money when the market is going up like this, and then you place your trade here? Let's say you are buying. So as the movement is going up like this, you are making your money. If you predict that the market is going to sell or going down like this, so as the market is going down, probably you enter here. So as the market is moving as you predicted, you are making your money. Simple like that, guys. So then when can we trade the market? Okay, this is a $1 million question. When can you trade the market? And then we've got sessions. Okay, so we have got sessions. We've got the Tokyo session. The Tokyo session opens 7 p.m. This is 7 p.m. then up to 4 a.m. So this one is the New York time. Okay, this one is the New York time, meaning it is different according to your time zone. For instance, here in Zimbabwe, 7 p.m. I think it's around 2 a.m. because it's +7, the New York time. So meaning it's 2 a.m. To 11 a.m. Okay, so you need to add depending on the time on your time zone. But the Tokyo session, it opens at 7 p.m. And closes at 4 a.m. Then we've got the London session, and then the London session opens at 3 a.m. and then it closes at 12 p.m. So remember again, this is the New York time, which is different according to your location, which is different according to your time zone. Then we've got the New York session, which opens at 8. The New York, it opens at 8 and it closes at 5. So you need to know when to trade. You need to know, because we have other people that are at work, other people are working, so you need to know on how to schedule your timetable. Then what do you need to get started? This is a simple question. Okay, so number one, you need a smartphone. You just need a smartphone. Even a laptop would be an added advantage. So I know that maybe currently you're using your smartphone, so through that smartphone you can make a difference. So that's number one, you need a smartphone. Then number two, you need an internet connection. You need to be connected to the internet, and then you need to download the MT4 and the MT5. So these are the platforms that we are using. So these are the platforms that we use, the MT4 and the MT5. These are the platforms that we use to place our trades, to enter our trades, to make money. And then number four, I didn't write here, you need to open an account with TradingView. We use TradingView to do our analysis. Okay, so then you register with a broker. You need to register with a broker. For this time, I'm using Deriv as a broker, so there are many brokers that you can register with. So this is what you need just to start making money in the forex market. How do you place a trade? So as I mentioned, that you need to download either the MT4 or the MT5 depending on the requirements of your broker, and then there are orders that we use when you're placing your trade. So for instance, we've got what we call the market order. So this one is an instant execution. For instance, if you want to sell, let's say you want to sell, you come here. So this is something that you see on your MT5 or your MT4. So if you want to sell, let's say you want to sell, you come here, you click sell, and then the broker will automatically place your trade. That's what we call market order. Or you come here, you want to buy, you click here, buy. The moment you click buy, and then automatically your trade is on. This is what we call a market order. Then the other one, we've got the buy or the sell stop. The buy or the sell stop is when you have let's say the market is here. Let me try to demonstrate this one. So let's say the market is moving like this, and you want to place your entry at this point. Okay, so this is where you want to enter, but currently the market is here. So you set what we call a buy stop. And what you are saying is simple. You are saying when the market reaches this level, you want it to automatically place your trade. Let's say maybe you are working, you are busy, you don't have time to watch the market, you set what we call a buy stop. So the moment the market reaches your buy stop or your sell stop, it will automatically trigger you in. Okay, so this is what we call a buy stop. Then the third one, we have got a buy or a sell limit. So a sell limit or a buy limit is opposite to a sell stop. What you do now, you are placing your trade below. Okay, this one you place it above the current price, but this one you are placing it below the current price. Let's say the market is here, let's say the current price is here, and you are saying if the market retraces to this point, you will enter the market. Okay, so if the market retraces here, it will trigger you in, and it will begin to continue with you. So this is what we call the buy limit or the sell limit. So I'm trying to rush. For more questions, you have to leave a comment. Okay, so I hope the information is valuable, guys. I hope you're enjoying something. So don't forget to subscribe to this YouTube channel. So this is the end of module 1. Whatever that you didn't understand, feel free to comment, and then I will try by all means to clarify things.